Market volatility is at the highest since 2020. So are we on the cusp of a financial crisis right now? Well, we're going to get into that. Obviously, Trump announced that he's doing a 90-day pause on tariffs. But the hilarious thing is Canada is not included there with China because Canada obviously retaliated. Obviously, you can remember me saying about that. They should have took the stance of Mexico and do nothing. And actually, you see, Mexico had no retaliation there. So obviously still the only two countries locked in this trade war are actually Canada and China at this point. And this is what Pierre Poilievre said about that.
I have to address today's latest disrespect by President Trump of our country. While President Trump announced a 90-day pause on tariffs for dozens of countries, he kept those tariffs in place on Canada.
And that's actually not really strictly true, because if you look at the USMCA deal, I think it's about 50% of the goods that are flowing across the border. So you've actually got 50% of goods which have no tariffs or the agreed tariffs within that agreement. But obviously both leaders are going to take this hard stance. And at some point, they're going to have to walk that back, because Canada is not going to win a trade war with the United States. It is just completely insane. And most of us know that on this channel. We're not stupid. So let's take a look at the volatility right now. So this is the VIX volatility index, and it's at 43% right now, but it's at the highest levels since 2024, when you obviously had the yen carry trade that was blowing up. And it's really at the highest levels going all the way back to the pandemic, which is pretty insane. So if I pull this out to a weekly chart here, you can see you're going back to 2020, apart from when you had that brief sell-off last year in August, which was supposedly about the yen carry trade. Now, another thing that is starting to move up, and this usually moves up very quickly, is corporate credit spreads, which blow out. And basically, that is just another indicator of liquidity. When you have this blowing out, it means that corporate bonds are getting more illiquid. People don't want to buy their debt. Now, obviously, that's a huge problem in the financial system, considering all these public listed companies rely on selling corporate bonds. And obviously, if the spreads are blowing out, that means they're getting incredibly illiquid. And now I want to show you what's going on in currency markets right now, because it's absolutely insane. We've also got oil that is selling off substantially. We had that huge rally yesterday. Absolutely crazy. I don't think I've ever seen indices move like that. They're moving like a small cap stock. They're not moving like these massive indices, which could again be evidence of liquidity issues and the liquidity not being there. And what you really have to see is obviously oil is going down right now, and you've got yields in the US that are rising. So those two things don't go together either. So it's really strange what's going on right now. We've also got gasoline. I can just see that now is under $2 a gallon. So gasoline is really taking a hit. And if you look at gold prices, they're practically at all-time highs. I think they are at all-time highs right now. So you've got gold prices that are absolutely surging on this as well. And something that I thought would be really interesting with the bond yields that are surging is if you go to macro trends and you look at what happened before 2008, and it's really interesting. So basically you can see around the end of March, you basically had yields that shot up here on US treasuries, and we're having the same thing that is happening right now. So they went from 3.34% to 4.27%. So 100 basis point rise. That's a huge rise. And it happened, within the space of a couple of months. So very interesting. And then if you go and look at what happened with gold, gold was churning new all-time highs until around March. And then it started to sell off until the sell-off in October 2008. But you can see here as well with gold, how it's an incredible store of value, because even though because of the liquidity issues it sold off here, it quickly recovered and it was back at pre-global financial crisis levels by May 2009. So not even a year. So it's very interesting what's going on there. The major indices right now are down like 5%, which is completely insane. These moves are just completely crazy right now. And obviously what's really interesting as well is if you look at the DAX in Germany, that finished up over 4.5% 2.5%. You've got the S&P TSX, which is down 3.3%. But what is even more interesting is moves in currency. So you've got the euro that is surging against the dollar right now, and you've also got the pound that's surging against the dollar, not as much as the euro though, and even the Canadian dollar is really showing signs of strength, despite the fact that it's been crashing for years now, and in this long-term downtrend, it looks like, at least for now, there's a nice technical bottom that is in for the Canadian dollar. But what's really going to be interesting is how long this goes on for, because basically the dollar is the reserve currency, and the US Treasuries, they are the lifeblood of the financial system. So when you start to see issues in the Treasury market, that doesn't bode well for the global economy. And the other thing that you've got to think of, because a lot of people will be like, oh yeah, this is great, like the US is just trash right now, nobody wants to hold their debt. That could not be what's happening at all. It could just be hedge funds that are trying to sell anything that's liquid on their balance sheet, and soon enough they'll turn to gold as well, because gold has been pretty volatile. If I break this down to a daily chart, gold was selling off, even though it's back at all-time highs right now. So it's not like it was unaffected by all the market gyrations that we're seeing right now. And that's always the one that I'm keeping my eye on, because when gold usually sells off at a rapid rate, that's usually a sign of liquidity issues within the financial system. Now, what's interesting is government bonds at the front end of the curve are actually doing a lot better. So if you look at the Canadian government bond, the bond yield is actually down today. But if we look at the US government bond, the bond yield is again down. So that is suggesting that the Federal Reserve may be cutting rates in the United States as well. Even though you've got the issues with the Treasury bonds at the long end of the curve, that could be more because the liquidity depth isn't as much, and you basically got liquidity issues that are going on. So they're trying to sell what's liquid, and that's always going to be US Treasuries, things like gold. So we'll really have to keep an eye on how this all unfolds, and how the market obviously reacts to this is going to be incredibly interesting. And what's really interesting as well is this, and obviously the fact that China and Canada are once again holding hands together on a chart like this is not a good sign. But these are the two countries that retaliated right now. And is it now time to stop talking tough and to actually negotiate than try and polarize people just because it's an election? And I think really what you're seeing is a heads up of these politicians. When one of these two politicians gets into power, they're putting votes before putting the long-term interests of Canada. And this is always the problem. It's always the case. And this is why the country is in such a mess right now. It's because it's all about votes, polarization. It's not about actually the long-term growth of the country like they claim to care about so much. And it really is just annoying to see so many people who are polarized and gullible when it comes to these type of things, and they just like to hear them. Obviously, Trump hasn't even threatened Canada's sovereignty, to my knowledge, since Justin Trudeau is gone, and he wasn't well liked by anybody, let alone Trump. Nobody in Canada liked Trudeau, and he should really be behind bars, quite frankly. So anyway, we'll have to continue to monitor what happens with the markets here. Incredibly interesting. I want to thank you so much for watching this video. If you've enjoyed this video, highly recommend you check out this video here. If you're looking for a VPN and also want to help support the channel, get the best VPN, which is the VPN I use, ExpressVPN. Check the link in the description for that, and I will see you in the next one. Take care.